Welcome to Leadership Reimagined, where game-changing conversations are reshaping the world of work. I'm Janice Ellig, the CEO and founder of Ellig Group, Executive Search Advisors, where we are reimagining search through our long-standing commitment to diversity, equity, and inclusion. On today's episode entitled A Legendary Trailblazer, I'm delighted to welcome a powerful Wall Street voice, Barbara Novick. Barbara was a co-founder of BlackRock when they began in 1988 and recently transitioned from vice chairman to senior advisor. For the past 20 years at BlackRock, she headed the Global Client Group. In 2009, she formed BlackRock's Global Public Policy Group. And in 2018, she took on oversight of BlackRock's investment stewardship team. Externally, Barbara has also made a major impact as vice chairman of Cornell University's Board of Trustees and a member of the executive committee of the Investment Company Institute. She is also a member of the Committee on Capital Markets Regulation, 100 Women in Finance Board, Center for Financial Stability Advisory Board, Milstein Center for Global Markets and Corporate Ownership Advisory Board, and the Peterson Institute for International Economics Board. Barbara has authored numerous articles on asset management and public policy issues and was named one of Barron's 100 most influential women in U.S. finance. I've seen Barbara's career over the past decade, and she truly is a legendary trailblazer. I'm honored to welcome Barbara Novick and to take time from her busy schedule to be with us today. Thank you so much, Barbara.
Thank you, Janice. I'm delighted to join you today.
Well, we have a lot to cover with your very rich career. But first, a big congratulations is in order because after 33 years with BlackRock and as co-founder, you've decided to transition from vice chairman to a senior advisor role as of Feb 1, which just happened. Before we get into your stellar career and accomplishments, however, I'd like to really talk about what got you to where you are today and the path you took and why, because you truly are one of the very few women who can claim to have been a founder of a behemoth asset management company such as BlackRock. So how did this all come about, Barbara?
Well, it's interesting, Janice. Some people talk about climbing a ladder and other people describe more of a jungle gym. I think I'm probably in the latter category. I began as a technologist at Morgan Stanley, where I really learned the nuts and bolts of finance. And I realized along the way that I was much more of a people person and hence moved to First Boston for a different type of job. That's where I met Larry Fink and Rob Capito and Ben Golub, who are all co-founders of BlackRock and still active in the business today. BlackRock, of course, was a startup, so all of us wore a lot of different hats. And my primary role for the first 20 years was more on the business development and client service side. About 10 years ago, a little bit more than that, I switched. I decided to step down from that role and ended up starting up a public policy group. And for the last couple of years, also ran the stewardship. So I've been able to build on the foundation, switching roles over the years and moving from one area to another. Many of those at BlackRock, but not just at BlackRock.
It's interesting because when you and I had a conversation before today, you talked about when you graduated in December, it was not easy to get a job and you had two offers, one in consumer products and the other in financial services, right? And you took the latter.
Right. Morgan Stanley was my primary offer and really wasn't a plan. It was just sort of what happened.
Right. And here you are today. It's amazing. And it is interesting that 8 of the co-founders, now 33 years later, 4 are still there, although now you're leaving. It'll be 3, but 50% are still there. And I understand you were going to retire last year, but Larry Fink convinced you to stay one more year working with the regulators during the pandemic. So what were some of the challenges you faced and how did you navigate through 2020?
So keep in mind, we announced I was going to step down in February, and it was literally only a few weeks later that COVID hit. And the world changed instantly. I realized that in March, during the fateful weeks, that a lot was happening in the markets. And I started immediately engaging with our portfolio managers to understand what was happening, and then also engage with regulators around the world and other market participants just to try and see what could be done, where there were pressure points, things like that. Keep in mind at that moment, everybody was also pivoting to work from home. Once we got through March and things calmed down a lot, what we started to do was look at what had happened and try and document it. So we wrote a series of papers called Lessons from COVID-19, and we looked segment by segment for both the understanding of what happened and then for recommendations of how to make the system more resilient for the future.
And were your clients, ringing you a lot about this? Were there challenges globally that you had to make sure that they were going to be okay through this? I mean, the outreach to your clients?
There was tremendous outreach. Keep in mind, in March, every market was affected. So from the very short end commercial paper, even the treasury market, which is normally the most liquid market in the world and quite dependable in a crisis, even in treasuries, there were some gaps. Equities obviously fell dramatically. We saw some clients who have policy guidelines and policy limits rebalancing out of fixed income and into equities because the dislocation was so great. You saw on clients that had derivatives, significant margin calls from the CCPs and others. So a lot of change, a lot of volatility, a lot of dislocation, a lot of uncertainty. And in those environments, we tend to interact with clients even more than usual.
So you've worked for all these years truly in a male-dominated field, and you've talked about the team being so strong, the culture being so strong, Larry really being a mentor and a great person and just a great culture to work in. You survived, you thrive. So you can look to the team, but what else do you look to in terms of your success?
I grew up in a family with a retail business, and I worked alongside my dad. It never occurred to me that I couldn't do anything I wanted to do. Now, of course, we look back today and we realize that there were trailblazing aspects to my career. And I'll admit it wasn't always easy, but I found good partners and I forged a path. And good partners included at home and at work. So my husband was really instrumental in supporting me. But my partners at work were also very important in that support, and Larry in particular. And along the way, I also learned to advocate for myself and to become more assertive. Now, of course, that risks being labeled, quote unquote, aggressive, which we know is a gender issue even today. But I did find that it was important to be an advocate and to express ideas and to really look at opportunities and solutions and things like that, which didn't initially come naturally, but learned over time.
We're looking now at 2020, and BlackRock has exceeded expectations for the final quarter. As the world's largest asset manager, you set a new record high for AUM, assets under management, now at a phenomenal 8.7 trillion. You saw double-digit growth in almost every category of the business in 2020. How did you have to rethink money management in response to some of these unprecedented times? How did you achieve this phenomenal growth?
So I don't think it was that much about rethinking. My dad taught me the fundamental idea that the customer is always right. And I built that into our approach on the institutional business from the outset. We always tried to put ourselves in the client's shoes, not just meeting their needs, but wherever possible, anticipating their needs. So thinking like they think. And one of BlackRock's key principles is what's called One BlackRock. And we talk about that pretty publicly. It's all about being a client-centric firm. So knowing that clients had questions and trying to give them information that would be helpful. I think we executed on that really well normally, and especially in 2020. It's about bringing solutions, not just products. And when you look at one of our fastest growing areas has been multi-sector products. So helping people with their asset allocation. We also offer technology, and Aladdin has been a very important source of growth for us. And finally, sustainable investing. This has really caught on, and it's an area where BlackRock has been a leader. So all of these things kind of come together where people are seeking solutions, they're seeking excess return, they're looking to do it in sustainable ways, they want to measure things. All of those things really lead to the results you saw in 2020.
And you stated, or BlackRock has stated, that they've retained some of their clients for over 25 years. That's really a remarkable track record for retention. Are some of the things you're talking about, is that the result of the retention is because of all these things you've done?
It all comes back to how you treat your clients. When people talk about stakeholder capitalism, I always use clients as my first example. And I say, what kind of business would it be if you don't treat your clients well and respectfully? It's easy to look at stakeholder capitalism and say, oh, it's stakeholders versus shareholders. But I use it as the example of why it's a symbiotic relationship. We were able to evolve over time, stay ahead of our clients' needs, offer them solutions to their problems. That's stakeholder capitalism. The result is really long relationships, multiple products with a single client, referrals to their colleagues at other institutions. And the most interesting is many of our clients are what I call repeat buyers. When they change jobs, they turn to BlackRock to help with their new problems. So I do think it's all about being client-centric and treating your clients well.
And I love the fact that, one BlackRock, so whether it's you, Larry Fink, Rob Capito, and others, you're all focused the same way, very client-centric. And you call BlackRock somewhat of a small firm, right? With 16,000 employees, like a lot of them. So it sounds like there are no sharp elbows here. Everybody's really working together for the betterment of the client.
That's been our history. That's a hard thing to maintain, but culture is extremely important. And it's a message that we reiterate everything from when people are onboarded to when they get an employee opinion survey to when they get their own review. At all different levels, we look for feedback on that topic to try and reinforce and keep that culture.
Let's turn to what has been a real issue in this country, the social unrest. BlackRock has created a meaningful action plan in 3 key areas to accelerate its commitment to racial equity. What does it look to do, and what's the outcome of this plan, and what might be the global impact?
We believe in leading by example. We try not to ask people to do things that we wouldn't do ourselves. For example, we're reporting EEO data, and we're one of the first to do that. But we identified 3 areas for action, as you mentioned, and let's think of them as 3 pillars. The first pillar is the hiring, the talent, the culture. So hiring, onboarding, training, opportunities, visibility, promotions, anything that you can think of that would fit in a normal talent agenda, really trying to look for opportunities to give people that increased visibility, which often leads to promotions and other opportunities. The second pillar is, as a fiduciary on behalf of clients, we have a unique opportunity. We do a lot of trading, and there are minority and women-owned businesses where we have been a leader in trading with them, all the time keeping a focus on best execution. We recently launched a new fund, a BlackRock Impact Opportunities Fund, that focuses on accelerating positive economic outcomes for Black, Latinx, and Native American communities in the U.S. And our investment stewardship team engages with companies all over the world and talks about everything from board diversity to the workplace, ethnic, gender diversity, really looking at a company somewhat holistically. So those are areas that, as an asset manager and as a fiduciary, differentiate the firm. And then the third pillar is about policy and social impact in the communities where we operate. So I'll give an example. Earlier this summer, we had an opportunity to back some legislation in the state of Georgia. We endorsed that. We were one of the first companies to endorse that. Likewise, on the social impact side, when you look at what's happened during COVID, obviously many issues have come out. Some people call social impact philanthropy, but essentially being able to support initiatives in local communities. And we look at these three pillars as a whole. So it's about how you're treating your own employees, how you're using your ability as a fiduciary, and then how you're dealing with more policy and philanthropy kinds of issues. And I think the combination is really quite powerful.
Well, I commend you and BlackRock, Larry and Rob, all of you for setting these goals and action plan. And you've also set one for BlackRock internally, an ambitious and commendable 2024 goal to double representation of your Black senior leaders and increase overall representation by 30%. Yet today, only 3% of your senior leaders, directors, and above are Black. So how can you achieve this in the next 3 years, given where you are today?
It starts with leadership and communicating a vision, which Larry has already done. And if I go back to that first pillar about talent and culture, you have to start by measuring progress, right? If you have no benchmark, if you have no starting point, you don't know how you're doing. And if you're not measuring it on an ongoing basis, you don't know if you're improving or actually going backwards. So you need to look at the hiring stats. You need to look at the promotion stats. You need to make sure there are diverse candidates on the viewfinder. And then you need to provide the training, the mentoring, and those opportunities, many of which come from visibility. So that's the program that we've set out. We will be measuring it. We will be reporting on it. And I'm quite optimistic when it's measured and it's a focus, we'll do quite well.
I love the transparency of it all and that you've announced this. So I'm sure you will get there. I want to remind our audience, we are listening to A Legendary Trailblazer with Barbara Novick, former vice chairman and co-founder of BlackRock. The topics we cover, like today's, are all current, and a new topic with a new game changer is released on the third Thursday of every month. This is a great way to stay current on relevant issues happening around us. Now let's return to Barbara Novick. Barbara, recently Ellig Group published a document in collaboration with the Society for Human Resources Management. This came about from convening board directors to discuss actionable solutions that companies can employ to diversify their boards. And BlackRock has stated that boards should be comprised of a diverse selection of individuals who bring their personal and professional experiences to bear. Companies should take full breadth of diversity into consideration and provide process-based disclosure as well as diversity statistics. This is something you're going to do internally yourself. So what do you recommend to companies today in terms of board leadership and accelerating the pace of change? What's your advice to them?
First and foremost, boards need qualified board members. And in the past, you often heard, yes, we want diversity, but there's no pipeline of diverse candidates. In today's world, you know from your own business, there are plenty of diverse candidates who are very, very qualified. So you need to be able to look past the question of, have you been the CEO of a public company? Because if that's the criteria, there is no pipeline. It's a very, very tiny subset. But today's challenges are different and they require a fresh set of skills. Some boards could use refreshing, which might open some seats. Other boards might want to add one or two new seats. Either way, the point is to get the right expertise in the room. And I'm willing to bet that searches that include diverse candidates will end up with more board diversity as people meet these excellent candidates. And I've actually seen it in action. So I know it can be done and it can be done at scale.
So when you look at qualifications for boards today and you're a major investor in all of these companies and you're not trading that out, you're leaving your money in there. You want them to have good corporate governance. So we've always heard, well, we can't find a qualified woman or a qualified person of color or, well, they really weren't in the C-suite. Is it about opening the aperture, and how wide do you open it to while you still have qualified candidates coming into the boardroom?
It's definitely about opening the aperture and think about the issues that are important today. Things like technology, social media, public policy. These are areas that really were not front and center until the last several years. So if you want to get the right candidates, are you looking at a CEO who retired 5 years ago? these issues wouldn't have even been on their board agenda, never mind in the C-suite. So I do think it's widening that aperture, thinking about what expertise you want in that boardroom. Things like marketing. Marketing has changed dramatically. There's so many different topics, and I think their candidates may be a level down or head of a specific part of an organization or just non-traditional from a board member background perspective.
But they're more hands-on leaders is what I hear you saying. They're in the throes of it, and their relevancy is very important to that board.
And I also think, Janice, there are a number of companies who have recognized that boardroom experience can also be important to enhancing the career of some of their own leaders who are that next level down. So companies are maybe more willing today to allow someone to take that board seat if it's offered to them as a currently employed person as opposed to a retired person.
Yeah, so as we had to pivot last year and things are going to be in a new reality, not even a new normal, when you look at the company's business strategies, and given that primary customers are increasingly going to be millennials and Gen Zs who use social media as a communications and buying tool, what do companies need to incorporate into those business strategies going forward?
Reputation has always been important, but I would say it's even more important today. We're bombarded with news from multiple sources all day long. Social media platforms have become powerful news sources of their own in business as well as in policy. As a company, you have to have a presence. Things like LinkedIn, people are getting their information business-wise from LinkedIn. You also need to think about your customers and how they access information. So user interfaces. Think of it more as meeting your clients where they are as opposed to them coming to you. And I'll give an example at BlackRock. When you wake up in the morning, you can ask Alexa, what does BlackRock think about the markets? And you get a coherent answer. So that's something that we wouldn't even have thought of 10 years ago because Alexa didn't exist. This is coming back to my earlier point on the boards. Things that we're using today that are so important to our business, fundamental to our business, were not even on the viewfinder 10 years ago.
So the board member of tomorrow is really needed today, given the changes that have taken place. So we need to really open our mindset and going forward with a new definition of what makes a great board member is what I hear you saying. Is that correct?
I think so. I do think so.
And you talk about reputation. So socially responsible investing, is that part of a company's reputation in terms of what they need to do? Why is it so important, more so today than ever before, Barbara?
I want to step back first and define things a little bit. The term socially responsible investing started probably 20 years ago, and it really referred more to excluding certain sectors. So it could have been tobacco or weapons or fossil fuel. And it was recognized in that construct that you might give up return to follow your social values. Today, I think the market has shifted quite a bit. We talk more about sustainable investing, and sustainable investing takes those factors of governance, environmental issues, social issues. You'll notice I started with governance, not with environmental, because governance really is so critical. And these issues today are being viewed more as investment factors that drive long-term value. I couldn't have picked a better day to talk about this because there was an announcement that the Vale company has made a huge settlement, billions of dollars. And this is related to the mine accident that they had. So there's an example of value destruction, ignoring environmental issues, taking risks that were inappropriate, and then destroying the community. So you can call it environmental, you can call it social. I'd call it a governance failure, that they really were not paying attention to the risks and managing the risks properly. And that would be where we would define sustainable investing. looking at the investment factors and the impact on long-term value, and keeping in mind that our customers, many of them are saving for retirement or saving for long-term goals. So they're interested in long-term value. Our index funds hold everything, and they hold it kind of forever. And so we're interested in long-term value from that perspective. But it's as much about increasing value as it is about minimizing value destruction.
That's so important. It ties to Larry Fink's annual letter to CEOs, where he addresses those issues, the durable values such as capital management, long-term strategy, purpose, and climate change. And in a recent announcement, which you, I'm sure, were there as he was crafting it, is the companies need to show how they're going to reduce their carbon emissions to zero by 2050. Can you comment on this? Because this again is about reputations, sustainability, saving our planet.
We've expressed over the last several years a strong investment case for addressing the changing environment. And if you just took one piece, the regulatory trajectory, and thought about what it means for different companies, both as challenges and in some cases as opportunities, that alone would translate into investment value. So what we're focusing on is three things. One, measurement and transparency. And we're looking to provide data on the funds that we manage, which of course relies on data on the underlying investments, and also data on BlackRock Inc. And as I said earlier, we don't ask people to do things we won't do ourselves. We're also looking at these investment factors. How can we incorporate these factors into our own decision making, avoiding a company that maybe has a bad history or a bad future based on measurements and data? And we're also offering our clients choice. So a client who wants a portfolio that is an exclusionary portfolio can get that. A client who wants a portfolio that is more tilted in a certain direction can get that. And then lastly is we're focusing through our stewardship efforts on the transparency of the companies, the issuers themselves, and trying to get to a point where there is more data that is consistent. I think that's the key thing. Being able to compare company 1 and 2 and not just have companies cherry picking what they want to tell you about, but really looking at a common framework and being able to use that data.
I know there are many women out there who would look at your career and say, that is phenomenal. How can I do that? How can I get, on a track where I am today? Maybe some coming out of school, some of them in their first, second, or third job, but they're looking for, how do I get on a track where I can really make an impact such as Barbara Novick has made?
I'm not sure how to answer that. There's a certain amount of working hard and looking for opportunities. One piece of advice I give people is be willing to get out of your comfort zone, whether you're being tapped on the shoulder for an opportunity or you see something and you're interested, raising your hand. If I look back at my own career, that would explain some of my success, being willing to get out of my comfort zone, as uncomfortable as might be, and take on new challenges.
Well, you had a great culture to thrive in. That's one thing that people need to look at. Who are the people that they're going to work with and for, correct?
Exactly.
And sometimes it seems so simple, and yet it really does shape what your life's going to be like. It's like your partner in life, your partner at work, and your friends are all those who can really, move you ahead. And so you seem like you've been surrounded by that. And you've also done it for other women, Barbara. You've helped women in their career, men in their careers. And so any parting words to our listeners today?
I do think it's about who you affiliate with. And that's true at any point in your life and career, right? You care about who your kids' friends are. And when you get into the business world, I think it's the same thing. You want to find people who are ethical, and high integrity really does count. Reputation does count. You want people who have a similar work ethic and who are going to give it their best, but who share values. And I think that that's probably the most important thing when people talk about fit. Do you feel comfortable that this is a group you want to be affiliated with and your reputation is going to be tied to? And if you can't say yes to that, you should be looking elsewhere.
Well, Barbara, I have known you for over a decade, and I have watched your terrific successes, your career. You've always done it with tremendous character, integrity. You've been collaborative, been a great communicator. And I know that there are many things ahead of you that you will take on, but I recognize that for a little bit, you're just going to step back and see what you want to do next. I'm so grateful to you for being on the program today, for sharing with us your story, your remarkable career, your experiences. And I know we're going to be hearing much more from Barbara Novick in the future. Truly a legendary trailblazer. So thank you so much for joining me today, Barbara.
Thanks, Janice. I really enjoyed joining.
And thank you to our audience for tuning in to another game-changing conversation on Leadership Reimagined, released on the third Thursday of each month. You can find me on Twitter, LinkedIn, or visit our website at elliggroup.com. Thank you all for joining us today, and thank you, Barbara Novick.